Reimagine Roofing was started 5 years ago because I wanted to help bring some professionalism to the roofing space. I came from the solar industry before and I just wasn't happy with the professionalism and the sharpness. Coming from the Marine Corps, I really found it important to have professionalism in everything I do, and so that's why I started Reimagine Roofing.
But let's dive into things. Cody, before we jump in, can you introduce yourself in 60 seconds or less? Tell everybody about your experience and what you do.
Yep, my name's Cody. I'm founder and CEO of Reimagine Roofing, which is a multi-state roofing and solar company. We operate in 10 states nationwide. Prior to that, I built solar sales teams all across the Southwest. And then prior to that, I went to ASU and got a degree in sustainability. So I've been in the solar space over 10 years now. And what we do is we help homeowners on a B2C and a B2B level save money through investing in solar, and in particular pairing that with roofing and solar at the same time to ensure that you have a long-term return on investment and you're not hit with hidden fees down the road on the roofing side.
Wonderful. Now we'll dive into this a little bit here, but what I really like for you guys is anyone who is taking advantage of real estate professional tax status, or you have a building in your business or short-term rental loophole. This is just another way where we can reduce our taxes, but also there's very few ways where we can both reduce our taxes and our spending. So one of the areas that I don't really fully understand because I just don't know the industry, but you likely will, is when it comes to let's say we have some of our clients here, they have rental properties or business properties. And they are like, well, this sounds really cool. I can reduce my energy costs, but how do I determine what is it going to cost for me to put some of these panels in, and what do the numbers look like if we want to do this, or how do we learn more here on how much this costs?
Yeah, so there's a couple different ways to look at it, and I'll give some raw numbers so that way people listening to this can evaluate if a deal kind of makes sense, kind of like a price per square foot, maybe on a real estate deal. And in solar, what they use is a price per watt, and essentially that's a measure of how much wattage you're buying. So one solar panel is 400 watts on average, and so if you bought 10 400-watt panels, you would have a 4 kilowatt system. So if you think back to your elementary school days with the metric system, 4,000 watts give you 4 kilowatts. Then, typically what you're looking for on the residential side, and it really varies. Obviously, if you're in California or New York, you're going to pay a premium versus maybe if you're in Texas or maybe some lower areas that have lower costs associated with it. But typically, if you can be under $2.50 price per watt, then you are at a good price point. That is what I would target. That's what I would kind of advise. Sometimes you'll get up into the 280, 290, and it could be worth that if it's in the right area, the right market, or with the right contractor. At the end of the day, you're making a 20 or a 25-year investment. So I do really encourage homeowners not to go with the lowest bid option, because this is such a large time horizon. Investing an extra $1,000 or $2,000 into a system will be worth it to not have the headaches down the road. Overall, all-in cost is going to really be tied to your electricity usage. So if you're if you're a small residential house and your average bill is maybe, let's say, $150, $200 a month, averaged out throughout the year, your upfront investment, if you paid cash for it, might be somewhere like $20,000 to $25,000. Typically on a cash payment, when you factor in the tax credit, and before you do what you would advise, Mark, on some of the depreciation and some of the outlying stuff, you're looking at about a 6 to 7 year ROI, and sometimes as low as 5 years, depending on your market.
Hey, one thing I want to point out here is, because we do have some folks that maybe syndicate and sell and exit, you want to hold the panel for at least 5 years, or else you're going to have a recapture of the tax credit. So, this has to be at least somewhat, you got to factor that into the equation here. But another really cool thing here is if you are looking at the economics, especially for you guys with multifamilies, where the valuation is driven based on ROI, if your costs are going down, it's going to look more favorable on that overall ROI, and it increases the valuation of the property, may allow you to refinance at a higher amount or even sell at a greater profit down the road, which is really cool. Let's get a little more into the numbers here. So, when you said a 5 to 6 year ROI, can you tell me a little more about what that means?
Yeah. So if let's say you take an average system and we say it's going to be about 25 to 30,000, we'll use 25,000 to start. And, let's say that's going to replace on average, maybe a $200 electricity bill for some easy math. On that 25,000, you'd get your initial 30% tax credit. So your actual investment cost, once you net that out, is let's call it 18,000. So if you're getting $200 a month offset that now you're no longer paying to the electricity company, that's $2,400 a year. And you do the math on that, and if you price in a little bit of inflation as the prices increase, you're looking at somewhere in that 6 to 7 range. One of the other ways you can look at solar is on a monthly ROI, where a lot of people will buy solar financed. And then what you're looking at, let's say it's on a residential home, then we'll talk about commercial. But let's say same scenario on a maybe one of your rentals, you can finance that solar over 20 years. Interest rates usually are about 1% over the 30-year fixed mortgage. So right now, like our interest rates are 20-year 7.99. So pretty competitive rates, pretty cheap money, no funding fees, no kind of bank fees on that. So in that scenario, you're paying $200 a month right now, and with the solar loan, your monthly payment may drop to $170. And so now you're getting instant day one ROI of $30 a month savings, but also every time you make a payment, just like on a mortgage, you're paying down an asset instead of a liability now. So you have day one savings in addition to eventually paying off that just like you are on a mortgage.
Right. And then so let's say we buy this panel for $25,000. We're paying $170 a month instead of $200 a month to pay off the panel. We're saving $30 a month in energy, but we also, even if we're financing and we have zero money down, we still get access to depreciation and we get access to the tax credit. So what we typically see here is like a 30% base investment tax credit, energy investment tax credit. Sometimes it could be 40% if it's all US made. What's the probability and likelihood that we can get to the 40%?
Definitely possible if you're educated. If they've worked with someone like you that says, hey, here's what you need to do, and you go to your installer and say, hey, here's what I want. It's definitely possible.
Okay, very cool. Now, for some of you guys, this can even get better. You can get up to 60% for a tax credit if you do low income housing, and also if you do it in something called an energy community. Although this is unlikely, there are all these different features where. For some of you guys, I mean, this could be insane for some of you guys. Like if you do have these attributes where you're investing, where an energy community is an area that's maybe impacted by natural gas and coal, or has relied on a certain percentage of their income from there. Not a whole lot of it, but low income housing is going to be more likely. And then you also have low income housing tax credits, all these other cool things out there. So for the right people here, this could be some really exciting stuff here. And then especially if you're a developer and you're developing stuff, there's a whole other world of tax credits out there that we're not going to have time to dive into. There's just a lot of hidden opportunities there in the world of tax credits. So if we were to finance this over 25 years, is there an initial down payment, or you just start with your monthly?
Yep, no initial down payment in most of the loans. It's really just you would just start with a lower monthly payment. So that's what's the beauty of that. It's day one ROI. It's like, hey, I'm saving $30 a month today. But what in that model, what you're more focused on is protection against inflation. If you look nationally, energy inflation has outpaced regular inflation, and we've obviously felt regular inflation. But if you look at some of the numbers, I mean, there's areas in Nevada that have seen a 100% increase over the last 3 years. Same thing with Connecticut. Florida's up over 30% after the hurricanes. Anytime you have like wildfires, natural disasters, it sends up insurance rates, but it also sends up electricity rates. So what it does is it locks in your monthly payment at $170 for the next 20 or 25 years. So, analogy I always give people is it's like if you could lock in the gas price at $3 a gallon today, if you could do that, it'd be a no-brainer because in 10 years it's probably going to be $5 or $6. And so while you get some of immediate day one ROI, it's really about that protection against inflation over the next, whether you hold the asset for 5 years or 25 years.
Right. And so we would expect, I mean, just based on natural inflation of like, whatever it is, like 5%, pretty soon you're paying less than 50% of what your energy costs would have been. So, over time, we're talking about significant energy savings here as well. I mean, so you get that initial tax savings and, fast forward 20 years from now you're spending a whole lot less than you would have spent on energy. And as you just do these monthly payments, and it's very liquidity friendly as well, because you're financing it, but you get the immediate tax benefits.
And another big thing that, I'm based out of Phoenix, and we have a lot of people coming from California here. And what we're seeing in the rental market is a lot of people are advertising as their rental as a fixed rate monthly. So they get solar, they're paying $180 a month. They tell the homeowner, hey, we'll lock your electricity bill. It's just $250 a month every single month. And you just pay that directly to us and we'll pay the electricity bill. So that makes their rental more attractive when here in Phoenix, our electricity bills in the summer are $600. In the winter, yeah, they're $100. But, if I'm kind of in a paycheck to paycheck kind of family, I would much rather have just a fixed rate electricity bill. And so it adds some value, on the rental side of things while getting a little bit of guaranteed ROI if you go that route.
Well, wonderful. So not only that, so now if we are landlords, we can actually add an additional revenue stream here that's going to be advantageous to our tenants. So there's so many different ways that this can be helpful here. Now, can you tell me about the maintenance of the panels and over the course of 25 years, what do we do here to make sure that these panels are functioning and doing what we hope them to do?
Yeah, and that's one of the best parts about solar. As long as you pick the right brands, which I really advise, the key thing to make sure of is that they have a 25-year workmanship warranty and material warranty with the brand. The panels, there's tons of really high quality panels, but on the inverter side, there's really only a couple brands, and the recommendation I have there is Enphase, just because of the staying power and the low failure rate. But the beautiful thing about solar is there's no moving parts. And usually what maintenance is tied to is moving parts, because, you change your oil because things are moving against each other. You change your brakes because, there's rubbing. When something's just sitting there, there's nothing to really maintain. And in this digital age, you'll have an app on your phone that will have real-time alerts. The manufacturer themselves also has, real-time alerts that will basically tell you if at the panel level, if you have 30 panels or 300 panels, you'll see at the panel level if panel number 22 has dropped in production, more than 50% over the last 24 hours. You get a simple alert, they get a simple alert, and 25-year parts and labor warranty because the failure rate's below 1%. And so in regards to maintenance, maybe after a big dust storm like when we have here in Phoenix, some of the commercial solar farms will clean them because 2% degradation at scale matters. But if you're talking about 30, 40, 50 panels, there's no need to even clean the panels at that point, because it's just so minuscule. Next time it rains, they'll just wash it off. But because there's no moving parts, the maintenance is very low. And 9 times out of 10, if there is an error, all we do is hit a button that says reset inverter. And it's just like turning off your computer and turning it back on. It just literally restarts the inverter, which is the brains of the system. And what Enphase does is micro inverters. So every single panel, you'll have 30 panels, 30 inverters, 50 panels, 50 inverters. And so each panel has its own individual brain. And so you can just restart that computer 100% from your phone, and 9 times out of 10 that solves it. The one time that it doesn't, like for example with us, we do free service calls because Enphase reimburses us. And what a microinverter is, if you ever look at it, you can just Google it. It looks like a giant plug. So we literally just come out and unplug the microinverter and plug in a new one, send it back to Enphase, and they, no question asked, and you're back online, the next day. And to cap it off, since they're all individualized, when you have just one panel down or one inverter, you still have 29 out of 30 going. So if you have one panel down for 3 days, you're losing less than 1% over the course of the whole month. So it's very, very segmented out that you're not going to have all 30 fail at one time. So your risk factor there is much lower as well.
Oh, beautiful, beautiful. So tell me about the process by which, so some of the guys listening to this live or in the recording are going to be interested in doing this. And I know we talked about this. There's all these factors that can kind of impact the value and the amount of savings. And at the end of the day, it seems like this works anywhere because even if you're break even, you're still hedging against inflation. But some areas are going to give you a greater immediate reward than others. But even if we're breaking even, we're getting the initial tax benefits and we're fixing our costs. But what are some of the factors and things to consider for folks here who are going to try to consider like the immediate rewards of this thing?
Definitely. So what all you're doing with solar is you're buying electricity. So the very first factor is what is the cost of your current electricity in your market? The Northeast has some of the most expensive electricity in the country. We're at like 33 cents a kilowatt hour up there. California, really expensive. Florida's starting to get up there. So when you're buying, something at that price, solar inevitably is going to be better. Then the second factor is sun. Obviously solar runs off the sun. So now the Northeast struggles there a little bit. And so that's why California is the single best market for solar. High electricity plus high sun. And then the third factor is local laws. And because one of the things that makes solar the most economically effective is if you have what's called net metering, where basically during the day you overproduce the amount of electricity that you need and you sell that electricity back to the utility company. And then at night, you buy electricity from them. So you're basically trading electricity. And then throughout the year, same thing. And maybe like in the winter here in Phoenix, we overproduce and sell excess and build up credits. So the rate at which you can export that electricity, in some places they pay you $1 for dollar exchange. In some places they pay you 30 cents on the dollar. So those three factors, what am I paying for electricity right now? How many days of sunlight? And then what is my utility company going to pay me for my electricity if I export it? Now, if you're in a market that doesn't have that, then you can look at batteries. There's other more advanced strategies where you just maybe only use solar to offset 40% of your electricity, because most utility companies now have time of use where they're going to charge you more, like in the summer during air conditioning hours and in the winter during heat hours when everybody else wants electricity. So if you can have a solar system like in Phoenix that produces really well during summer and offsets my electricity usage during expensive times, you can see an outsized return on that. So that's different names for that: demand shaving, time of use solar. And so it really depends on your local jurisdictions, what they're paying for that electricity, and then the days of sun.
And I think you told me that even in Pennsylvania, as far north as Pennsylvania, because of the energy costs in Pennsylvania, it still makes sense. Like a lot of folks, even in the Northeast, they're still doing it.
Oh yeah, Massachusetts is one of Pennsylvania, New Jersey, Massachusetts, because electricity is just so expensive up there. For example, it's over 30 cents. And just Pennsylvania went up 30% last year in a single new bill from the governor that he approved the 30% increase. So I mean that's massive. But over 30 cents in the Northeast, like here in Arizona, we're at about 16 cents. So they're almost twice as more expensive. So if they get half as much sun than me, we're basically a wash. And so that's kind of, when you have such expensive electricity, it doesn't matter that, for 3 months you don't get any sun. It's the cost of electricity, because that's at the end of the day what you're buying, and what you're offsetting is that, that liability.
Beautiful. And also, I forgot to mention, and we do have a couple of Californians in the audience who are feeling the challenges of being in California, whether it be the high taxation or all the other things. And not only can we see the benefits of fixing the energy on our rental properties and our business properties, but also on our personal residence. And you can get tax credits to pay for these things in your personal residences as well.
Yep. And the other great thing too that I'm sure you've talked to them about is like they can also do it on vacation homes. Like it doesn't have to be something that you permanently live in.
Very cool. So there's a couple of things here to break down all the different scenarios that allow for you to do this. Your personal residence, we're cutting our energy costs, and we're getting an immediate tax credit where you can then use that tax credit to do whatever you want. It's cash in your pocket. if you have real estate professional tax status and materially participate in your rentals, and all of our clients know what that is, where essentially you could use a loss to offset your W-2. You can use the depreciation on these panels to offset your income from your W-2 or business, and you get the tax credit at the same time. If you have a property for your business, because that's tied to your business and you work with us and we know how to group this with your business pays rent to your property. We do all the self-rental treatment of that. The losses from that rental will also offset your ordinary business income. So now it becomes even more appealing to have a home office. Now, let's say here that you don't have any of these features. Oh, another one, obviously short-term rental loophole where you can use your losses. Now, let's say you can't use these losses to offset your income. Let's say you're a passive investor into a portfolio of multifamily investments, multifamily rentals. There's still benefit here because if you get these tax credits, you can use them to offset your eventual profit within this real estate. It may be a future capital gain event, and maybe in the future when you potentially have rental income in excess of depreciation. Or let's just say you're among the few who have, let's say you're in a $0 tax bracket. You're like, okay, I like the energy savings, but why would I want to do this? I mean, from a tax perspective, this sounds really cool, but I'm in a $0 tax bracket because we're real estate investors and the government loves us. Well, you can take these unused tax credits and you can now sell them. You sell them at a discount. So let's say we could potentially get you $100,000 or $1 million in tax credits. Typically, we see people able to now sell these on the open market at somewhere between I'm seeing it around 70 to 90 cents per dollar on the sale of the tax credits. And when you sell something sell a tax credit, that income is untaxed. So there's all these different scenarios where we're already saving money on our costs, but we're also seeing really good tax benefits.
And yeah, just one other thing to add too, especially like on any personal or residential, that financing I mentioned earlier, the 20-year 799 or near 30-year fixed mortgage, those lenders will allow you to wrap a roof in with the solar. So if you need to do a roof replacement and the solar all together, now not the tax credit, to be clear, just the financing. So that allows you to if you're wanting to stretch some cash flow, you can replace the roof and add solar with no money down, which is can be really beneficial.
Yeah, and so for a lot of you guys, we had a lot of clients that got hit pretty hard by the hurricanes. And we're eventually going to talk about, because we're always trying to be on the edge of things that haven't really hit the masses yet, and this is one of them. But one of the things you can do is if you're already going to, replace the roofs, or it's time to do that, you can now not only bundle this in, but also some of the things that we can do on our end as CPAs is we can record what's called a partial asset disposition, where we account for the initial value of that roof, and because we're replacing it, instead of now deducting it and depreciating it over the remaining life, we just write it all off entirely before installing that new roof as well, and that's some additional tax benefits.
Yeah, and another huge part that you touched on there is we're doing a ton of this in Florida right now after the hurricanes. Let's say you have a $40,000 insurance claim on the roof because the hurricane completely destroyed your home. People are taking the roof and the solar, financing it together, and when that $40,000 comes from the insurance company, that's your money tax free because it's a reimbursement. And so it's just $40,000 in cash that now you've been able to finance at the long-term low interest and free up some cash flow, immediate cash flow that can be really advantageous for a lot of people.
All right, beautiful, beautiful. Now I want to run a scenario here, and it doesn't have to be perfect. I'm going to get an Excel chart here and just talk about how the numbers kind of come together here. And this is just so we can visualize what this looks like here. So let's say this is actually from another client who actually purchased $3.6 million in solar. I'm going to clear this. You guys don't have to buy that much in solar. Don't worry. I don't want to scare you. So let's say here, I'm going to just use let's say we have a typical $1 million large short-term rental property. And let's say that short-term rental property is in Florida. Can you give me like a reasonable number of what the purchase price would be on that?
Probably about 35 to 40,000, all in, assuming that, they're using it. They're probably using a good amount of electricity with that.
Okay, cool. So we purchased this panel for $40,000. Is a high-end short-term rental. Now our deduction. Now the first thing, let's say we can get the tax credit here, and that tax credit is going to be 40% of this. And obviously, if you have a large portfolio, we can do across your whole portfolio here. So let's say we can get a 40% if it's American-made investment tax credit. And you're not going to get that much. This is drawing from the wrong cell here. So right here, we got $6,400 comes back to you in the form of a tax credit.
Oh, it should have been times 0.4, I think, on there. You put 0.16.
Oh, why does it say 0.16? Thank you very much.
Yeah.
There we go. 16,000. That looks a lot better, doesn't it? $16,000 immediate cash in your pocket from a tax credit. Now, because this is recorded, I want you guys to pay attention that it is March 5th of 2025, and there's a lot of variables. We expect 100% bonus. If we were to get 100% bonus, what would happen here is you lose a little bit of basis here. So if we get 100% bonus, we don't write off all 40,000. Our remaining basis, you take this in, is like reduced by half of this credit. So if we were at 100% bonus, we would get our deduction of around of $32,000 of a tax deduction. And let's say if we can write off $32,000, and let's say here that we're in a tax bracket of 30%, a $32,000 deduction gives us an additional $9,600 of savings from the depreciation. So we're looking at a combined savings of $25,600 on a $40,000 purchase. So think about the government is paying for, in the form of credits and depreciation deductions, the government's paying for more than half of this thing immediately, right? Now, even if we don't have 100% bonus, you still are going to write this off over the next 5 years. So you'll still see the tax benefits. If it's not immediate, you'll see some of it immediately. So let's say we're at a 40% bonus depreciation. We're still looking pretty good here. I mean, we're still looking at a $16,000 write-off. And we're still saving $20,000. It's still really good. Now, if you are operating at a profit in your short-term rental, or this is business property, we can use Section 179 and then we write off the whole thing. So we can get back to that 100%, just like 100% bonus. So, depending on when you're listening to this recording, the relevance of these calculations will impact that. But even with 0% bonus, you're still writing this thing off. You're also not to ignore the fact, especially for you Californians, you're going to depreciate this property on your state tax returns as well. So I was just looking at federal tax savings. So, I mean, obviously the tax savings are really good. And for some of you folks listening that have portfolios of $20, $30 million across the country, if we were to do this at scale, we just uncovered $20,000 to $25,000 of tax savings. Think about doing this across a large portfolio. Now we're talking about hundreds of thousands of dollars of tax savings in energy costs, reduction in energy costs. Pretty powerful stuff, right? So this stuff is pretty good. Now, we have a lot of questions in the chat. Before we go into them, though, Cody, can you tell our audience on what's the process of getting started in this? If they wanted to work with you, and what's the process of actually getting in, purchasing? How long does it take to get these panels up and running?
Yeah. So it really depends on the complexity of the project as like any construction project would. But on a standard, if it's, nothing crazy, even if it's a commercial, you're typically, what you're going to want to do is you'd want to get it all from one source. You wouldn't want to get panels and then an installer, just like you wouldn't want to buy like, roofing shingles at Home Depot and then call around to see if somebody will install them. The only people that will kind of do piecework like that is going to be your lower end subcontractors. I'll give you the contact info that you can pass on to them. If I'm in their region, I can definitely help them out with a quote. Or really what you want to do as well is just make sure you shop like you'd shop for anything. Go on Google, look at some reviews, make sure that they're using products that are going to be a 25-year warranty on material and workmanship. And then really the key technological component of is make sure you have that microinverter that I talked about earlier. That is a key function over a centralized inverter. But basically what you do is same as like you maybe do a remodel. If it sounds like a lot of people are in real estate, you kind of find 3-4 remodeling companies. Get a quote, look at what their product is, go in there, take the information I provided today to let them know that you're an educated investor, because just like with a remodel, you can get the same remodel for $25,000 that somebody will try to sell you for $70, just because they may think you have no idea what you're doing and say, hey, let's see if I can get it for $70. So going in there with that information and really just evaluating the 25-year, but then just looking at it strictly at a price per watt. So, if it's a $30,000 system and it's 10 kilowatts, which is 10,000 watts, 30,000 divided by 10 means that's $3 price per watt. So that's all you have to do is, if it's 25,000, 10 kilowatt system, that's $25,000, 10,000 watts, 25,000 divided by 10,000 equals $2.50 price per watt. So just like you'd bid something price per square foot for flooring, you want to focus on that price per watt. Everything else doesn't really matter. There's some like 450 watt panels. There's some 300 watt panels. But at the end of the day, it's a price per watt that you want to focus on. So, if we're in the area, I'm more than happy to get you a quote. It's really simple. The technology is super simple these days in the sense of you basically take your electricity bill, which will show you all your usage, put that number in, and then we use satellite models with Google that's tied in with the number of days of sunlight, and then we can easily model out that shows different levels. If you say, hey, we had one person staying in this home last year and now it's going to be 4. Okay, maybe you want to add an extra 10% or 20% buffer on there, and we can do that with the models. But that's the process you'd want to go through, and that's what you'd want to really focus on as a number on the price per watt side.
Beautiful. So let's go into some of these questions now. Low income community. So there's the low income housing credit. So Ryan asked, can you define low income community? I don't remember the specifics of this just because it hasn't been applicable to the clients that we attract. But based on to get the low income housing tax credits, it is related to the average income and a portion of that amount being below poverty. I'll probably contact you separately with some more specifics on that. It's just not on the top of my head on that one, just because we don't get to see it very much. We got another question from Arati Sharma. Depreciation is available only on commercial property, not on residential or personal usage. Well, not necessarily. You're going to depreciate this in any scenario. But right, so if it's your residential property where you live, you're not going to write it off. Unless you want to take the stance that the portion of your panel that's powering your home office, you can write off that, and you can kind of group that into your home office. If you want to do that additional calculation, some of you folks may find it's immaterial and not worth that effort, but you could attribute some of this panel to your home office and depreciate some of this. The thing that I like about if it's commercial is you probably have you may in certain circumstances be able to show profit and then use the credit, use 179 to maximize depreciation there a little more easily. Natalie Lewis says, can you go over the process? Do we buy the solar panels separately from another company and you install them? So can you fill us in a little more on the process here?
I saw that come across earlier, so I kind of answered it. That's you would definitely not want to do that, just because the quality of install is going to be extremely low. Any kind of reputable company won't do labor only. It's in construction. That's kind of a step down once you've reached a certain level as a contractor. It's just you don't do labor only anymore. So because this is such a long-term investment, I would highly recommend invest a little bit more on the initial install and go with a contractor that's going to do full service. It'll be easier for you as well. Other thing that to potentially consider here as well, if it is a long-term hold, you might want to consider looking at metal roofing in conjunction with solar. That's really where we specialize, especially with our commercial clients, but a lot of our people's forever homes. The big benefit of metal roofing, twofold. One is going to have a 50-year lifespan on it, so it's going to last as long as the solar panels because they're warranted for 25 years. But just like a car, just like your computer, just because the warranty runs out doesn't mean they're going to break the next day. So lab tested, their typical lifespans are usually around 35 years. So you're going to have that post-warranty life as well. But the really beautiful thing about combining solar and a metal roofing, besides the longevity of the metal roof, is the way the solar panels install on a metal roof is with what's called S5 clamps, meaning there's no punctures. So literally it clamps right onto the metal roof. And once, in 35 years down the road, 30 years down the road, if you still have that property, when the solar is no longer working, we just unclamp it and take it away. And zero penetration, zero potential leak points. It's what a lot of our longer term investors look at as kind of a match made in heaven.
Awesome. We got another question here from Ryan, less related to do we try to purchase energy in markets where the cost is high and the output is high, or where we live and operate?
I think the answer is both. I mean, yeah, anywhere where there's cost is high and the output is high, and you have good local jurisdiction. For example, California used to be the no-brainer best solar market, hands down, and then they made some really significant changes in their laws that now you have to be more creative. It's not quite the no-brainer. You have to know what you're doing. So a lot of solar companies ended up failing out there. You look at a market like Florida where it's high output, friendly local laws, and high electricity prices. That's an absolute no-brainer. So I definitely think there is that balance there. But also there's a lot of solar that makes sense in markets that are more, like for example, Texas is really interesting because they have decentralized power, meaning that it's not uniform. And so during like the big freeze in Dallas or the massive heat wave, people were paying 700% higher for electricity because everybody wanted maximum heat right then. And so since it was not regulated, some people had $3,000-$4,000 monthly electricity bills. So a lot of people in Texas wanted the security and peace of mind in addition to maybe saving some money. But so it kind of depends where you're at to look at, what value might be there. Same thing in Florida post hurricanes, a lot more demand there because there was whole communities in Florida that never lost power because they were solar. So there's other factors outside of just the cost savings. Where you live, if you want the peace of mind and the security and you're in Florida, and you can save some money, definitely makes sense there. If you're maybe in an area that doesn't have natural disasters and it's not a ton of sun and electricity is really cheap like North Dakota, probably not the best option there, just because, electricity is so cheap because of all the natural gas.
Beautiful, beautiful. We got another question from Ryan, less related to this discussion. If we take a home office deduction currently and then rent a commercial office space outside the home, can I still take the deduction by having both home office and commercial space? Yes, you can have a home office and a deductible office outside of your home. Great question. And then we have a Roddy here, another accountant. Define an ideal candidate for this tax savings, individual and business client. I'm not sure if you could answer that, but yeah.
Yeah. I mean, an ideal individual is going to be, in my experience, people that are still somewhat sensitive to their monthly costs. It does seem like there's a certain threshold that, once I'm making X amount of dollars, I don't really care if my electricity bill is $600 or $800. Somebody that values saving $200 or $300 a month is an ideal client. And then on the business client side, businesses that operate during the highest energy times, which like in your hot markets, it's just, basically when everybody comes home from work and turns on the air conditioner, 5 to 9. In your colder markets, heat during the winter. So those are when your electricity is most expensive. And so if you have a business that has a lot of people coming in from 5 to 9 in the summer in Phoenix, like you're an ideal candidate because you're paying, massively when the electricity is most expensive. So that's really what I look for on the business side is, are you forced to buy this really, really expensive electricity? And then what does your roof look like? Like the building I have, perfectly square, flat roof. I'm looking right there across the street, and they got like a big curved roof with all these like weird little valleys, and like we need continuous space to be able to put solar. So that's the other big thing is roof space and then roof alignment. Facing south is where we want panels. We can also get a lot of good production from the west. Can't get very good production facing north. So if you have a super jagged roof that is, really architecturally beautiful, but I have no open space, I can't put enough solar up there for it to make sense.
Mm-hmm. Very cool. And then as far as how long it takes, Natalie asks, does it take 15 or 30 days?
Very impossible to answer because it really depends by region. Even just like, for example, here in the Phoenix Valley, Mesa and Phoenix are 20 minutes apart. Mesa has over-the-counter same-day permits, meaning we literally walk in there and they turn a permit back next day. Phoenix is 6 weeks out. Tucson just released instant online permits. So literally you send in a CAD, they use their internal technology, approve your permit within 1 hour. So that's really all that bogs down solar install times is cities. So like, if you're in Mesa, I can install solar in 5 days. We send to engineering, our team turns that around in 24 hours. We submit to the city, we get the permit same day, we're installing next week. But in Phoenix, 6 weeks is their average. If you throw in any type of holidays, or if, Bobby at permitting is out sick for a week, there's in a lot of jurisdictions, there's like 1 or 2 people there. And if that person breaks their leg or, goes to Italy for a week, you can go from 6 weeks to 12 weeks overnight. So very, very difficult, but it's really all up to the city, the contractor can make sure they submit the right paperwork the first time to speed it up. There's definitely contractors that it can go, way longer than it should. But for example, another place like Miami and Broward County, because of the hurricanes, we're looking at least 16 weeks on a good run, sometimes 24 weeks, just because it's hurricane territory. They want to look at every single thing, and it's just the process in Broward County.
Gotcha. Some other questions here. I'm going to handle some of these. Is it possible to invest in solar farms as opposed to properties we own? Absolutely. So we did Ryan, you can shoot me an email, Mark at Prosperl CPA.com, or just wherever you found this. We did a workshop, or part 1 of this workshop, we talked about purchasing solar panels to be rented out to third parties. And there are huge benefits. We had one client, he essentially purchased 3 million in panels. He invested $1 million, and he pretty much turned $1.2 million into $2 million in year one from it. So it is possible. You can also invest passively in the farms, but it's harder to take advantage of the credits. If you're a passive investor, they don't really let you use them as much, and the profitability isn't amazing. So it's just not that appealing to invest passively in other people's farms. Roddy asks, I have heard people saying you can carry back a tax credit 3 years. Is that truly the case? Yes, you can carry it back 3 years, but what's going to happen is first you're going to offset up to you can typically offset up to 75% of your first year taxes if it's over 25,000 before it starts carrying back against prior years. So that's going to be more applicable if you're doing things on a larger scale in here with the credits. And then with Natalie who is the bank that you provide for financing? The loan gets recorded and goes on title, correct?
Not always. So some lenders, it is a secured loan, some are unsecured. So it just depends on the lender. What I really recommend is to work with a credit union as opposed to a bank, because you typically get slightly better interest rates. So there are several federal credit unions that will do these loans A couple popular ones are Credit Human, Sorion, Soarion. So those are the two major ones we use, but also local credit unions can be really, really beneficial as well. We picked up a whole 1.5%. We have a 20-year 649, but it's only offered in Phoenix, like in like these 60 zip codes that the local credit union serves. And their investors said, hey, we want to get more green credits in these low income zip codes or whatever their criteria is. So if you're working regionally, you're doing just a city, I would highly encourage you to start at the local credit union level, because a lot of times they have some, investor directive or some goals, like we want to, do $2 million of green investing or green lending, and you can get some really, really good specialty rates on there. But if not, then go to a federal credit union, and then you can go to banks after that. Just typically, we've found that credit unions are going to help you save, 1 to 1.5%, on the interest rate over a bank.
I imagine when you find these vendors, they help you facilitate those transactions as well with the credit union.
Oh yeah. They want to lend the money, so they'll work with you for sure.
Fantastic. This is really cool stuff here that not a lot of accountants are exploring. So I'm grateful that we have you here. We're able to do this. One final question I have for you is, can you explain to us? Well, I can tell you one area, but what may be a reason not to consider solar?
If you're moving, you mentioned the 5 year, one, because of that, but two, it's a lot like, buying a car, or like, kind of buying the house. Like if you buy a house today and you don't do any improvements to it, and you just go try to sell it tomorrow, like typically you're gonna lose money on that. Same kind of idea here. If your time span's less than 5 years, absolute no brainer not to do it. If you're in a market like, Nebraska, South Dakota, North Dakota, some of these areas that are, have a really, really low cost of electricity because of local production there, and not a ton of sun as well. You can have low cost of electricity if you also have a ton of sun, then it makes sense. And then finally, if you just don't have a good roof, that faces enough south or enough west, it's just, we don't want to just put 6 panels up there and offset 8% of your electricity bill. I mean, it just really is almost not worth it at that point. There's some like fixed cost with people being sent out to a property, so you don't kind of get those economies of scale, and the ROI is just not there. So those would be the main reasons. And I guess the other is if which I think most people on this call wouldn't qualify for that, but it's important to say, is if you're somebody that is never going to have a future tax burden. Like we call them little, like, if you're just on Social Security and that's your whole income, and you make $25K a year and you're 78 years old, part of the benefit of solar is having the tax incentives in there, because that's such a huge part of it. So if your grandma is just living in a little small house and has her $80 electricity bill, like those people don't qualify either, in my opinion. I really think you want to have at least like $125 a month electricity bill, because again, same idea. If you got a $60 electricity bill, like we're not saving enough money to kind of cover the fixed cost and et cetera. So over $125 electricity bill, some tax liability at some point in the future, like you're going to pay taxes somewhere somehow, and you want to offset that. And then a long enough time horizon, more than 5 years, so you keep the tax, and then you also pay enough of the equity in to have that return on investment there.
Wonderful. Okay, great. So, I would say that of all of our guests, this is probably one of the most inquisitive. This is probably one of the most inquisitive audiences we've had for our guest speakers here. We got one more. Our HOA does not allow these home improvements of solar panels. How do you get around that? That's a good question.
Yeah, I would double check, because a lot of states have passed laws that disallow HOAs from prohibiting solar, but HOAs will still say that. So because a lot of the reason, like for example, in Arizona, you have a 10% state tax credit because the state of Arizona wants a certain amount of people to go solar, because it takes some of the pressure. What's that?
How awesome is that? Potentially a 50% tax credit.
Yep, because they want people to go solar to take some of the pressure off the grid. So the state then says, "Hey, I want you to go solar, so I'm not going to let some HOA tell me you can't go solar." Like that's and it's gone up in North Carolina as well. Florida also has state level protection, but that doesn't stop the HOA from saying it. Like we've had many battles. So I would just do a quick Google search, like can HOAs prohibit solar panels in whatever state you're in, and then that's where I would start, because we found a lot of times it's just a bluff.
Cool. All right, so it looks like we're almost at time here. You guys had some awesome questions, by the way, and I'm glad you did because a lot of people listening to the recording are going to want to really value this stuff. Now, calls to action here. So you said you can look for your local vendors. What if we really want to get in touch with you? And I know that it sounds like your special sauce is doing the roof and solar at the same time. For some of the folks here that need roof and solar or just solar, what are your thoughts if we want to just shoot you guys an email and we're a call to action on for the folks interested in further exploring these opportunities?
Yeah, I'll just drop my direct number in the chat. You guys can shoot me a text, and then I'll get you connected with somebody on our team. We can take a look at what the options are, do a cost analysis for you, and then kind of go from there.
Beautiful, beautiful. So I'm gonna, and also for those listening to the recording, I'll have that number, so I'll keep a lookout for that. Why don't you